sticking to commodities now, and it's a tale of three very different stories. One outperforming that no one would have expected, and two getting headwinds despite the FOMO narrative. To take us through it all, we're joined by Peter O'Connor from Short and Partners. Peter, thanks so much for joining us this afternoon. All right, so three stories. I know the first one is coal. Obviously, who would have picked that as a winner, hey? Tell us why it's outperforming.
Look, it's the dirty word, isn't it? Coal. Nobody wants to talk about it, but it's actually had quite a good year. And in fact, at the end of last year, September quarter, was the low in coal price for the cycle that we're currently in. So steaming coal price, which does go into that dirty industry, which is in long-term decline, it's actually doubled over the last 5 to 6 months. So coal miners who were striking at low share prices around about that time, September last year, are actually enjoying some tailwinds for the first time in about 2 years. So whether it's Whitehaven Coal or Coronado at the bigger end, they're starting to get some earnings momentum, some upgrades coming through, and some a decent outlook that they haven't had for about the last year. So that tailwind's been an incredibly important part of that. So balance sheets are starting to look better. There was a emergency raise by Coronado last year. A lot of people thought that Whitehaven would have to do one as well, but they've got through that, and now their margins are starting to expand. Costs are coming down, as they've had to focus on their costs last year given how low price was, and with price starting to tick up, margins expanding, earnings going up and looking like they'll be much higher in the next year ahead. That's financial year 22, and they'll probably both be reverting to dividend payments again, so quite a turnaround in the space of literally the last year.
Short term, that looks good, but of course longer term, it's all about that transition to renewables. So demand wise, what's the outlook?
Interesting question, and I get that a lot. Like, I call it the slippery slope over the next 10, 20, 30, 40, 50 years. So important to the demand side is who you sell to, and Australian producers who do sell the so-called cleaner coal, the low sulphur, low deleterious element coal, which goes primarily to Asian power stations, which are of a technology which produce less emissions. The build out of those power stations and the life outlook for those power stations suggests that they'll have a market for at least the next 2 or 3 decades. So without question, the market for coal is certainly in decline. Pockets of that market will continue to be there, particularly in countries across Asia. And that demand for a premium product, the demand side at least will be there. Price may be under pressure in the future, but the demand will be there. So Whitehaven Coal, short term, fully sold for the next 6 months. Again, who would have thought that? Coal being a dirty word. Longer term, certainly that will be a headwind, but not yet, and I do think their type of coal will be one of the last to not sell in the future in some decades' time.
All right, Peter, let's talk about one of those ones underperforming, and copper is on your list. Obviously, those speculative positions were significantly high in the last quarter of last year, but we did see that price trading around 11-year highs. So why has this one fallen out of favour?
Look, I call them the FOMO trades, the fear of missing out trades, and everybody loves to get behind a narrative they don't really understand, but they just use the word copper's going up because it's the Dr. Copper, or iron ore's going up because China. So you don't need a lot of explanation to get into a debate and sound like you're knowledgeable, but if you start digging into it, copper looks fine, but there's potentially some headwinds. I just mapped out 4. One being that speculative position. That's the traders, the non-commercial users of copper who just trade the direction of where they think it's going. The positions there peaked in December last year. They've been coming off since. They were at an all-time high. But more granular detail about what's happening in copper, particularly in China. Charges paid, the Chinese smelters are paid to miners in the likes of South America to process their ore, are at an all-time low, which is great for miners, but not so good for processors. So they're starting to get their margins squeezed at one end. The other end, the price they sell their copper for, the premium they used to enjoy on top of the copper price, that's been compressed as well, and it's been compressed over the last couple of months. And stockpile levels, which should be seasonally high this time of the year ahead of the build-out post-Chinese New Year, they do look a little bit higher than normal, have been ticking higher. So just a couple of factors at the more granular end, looking like just be aware of copper at 11-year high. It does look reasonably robust in that reflation trade backdrop, but it doesn't take a lot of negative news, as we've seen in iron ore the last few days, to start to see people backpedal there. So that's the copper side, certainly.
All right, well, you mentioned iron ore there, Peter. Obviously, we've seen some of the producers under significant pressure as far as their share price is concerned. Taking a look at the iron ore price, which has dragged. So obviously this is also off the back of those pollution controls that China has put in place. But so are you seeing this as transitory, or is it there some more longer term pattern emerging?
No, I think there's definitely a short-term signals we're seeing overnight and over the last week, but also there's a longer-term trend there as well. And we've all been calling the longer-term trend, so we've been wrong for probably the last 6 months. But the trend is lower, and why? Higher price incentivizes people to do things to try and address that. And one is to encourage new supply. So over the next 3-5 years, we're seeing supply potentially coming out of Guinea. Now hearing comments last week about Cameroon and Ghana, two countries that were talked about 10 years ago as sources. They're still there. And China looking to be all over those as potential sources for another 100 million tonnes of iron ore. And also higher price incentivising producers like Brazil to say, well, maybe we could ship more iron ore and build another port. And talk there about they're moving into a feasibility study to look at a 500 million tonne port, which compares to their current aspiration of 400 million tonnes. So that's quite a step up. So just that medium-term, long-term views about incentive pricing driving behaviour, which should see the market revert to a more normal price level, probably about a third of where it is today. But shorter term, and issues that have been bubbling before the news about the air quality issues in China, it's more been about stockpile build, and that stockpile build in the background, which has started to suggest that prices were getting a little bit far ahead of themselves over the last couple of months, and now stocks are trading at about a level of October 2019, a level where price was trading about the $80 mark. So we're starting to see some dislocation between price and some of the underlying fundamentals, which is fine in a market where it's very buoyant growth. But if you start to get some cracks emerging, which is the story about air supply in Tianjin, etc., that does start to create headwinds for the space. Hence, iron ore names have been softer over the last little while, and Fortescue's share price chart doesn't look very good at the moment. It looks like it's broken down through its recent upward trend from mid-late last year.
So Peter, you're not in the mindset that we are about to hit a commodities supercycle?
I'm not in the super cycle camp, only because I don't like the word, because it's a narrative which is just too easy to, and no disrespect intended, but it's too easy to leap on board and say it's a super cycle, everything's going up. What's a super cycle? What does that mean? So I certainly contend we're in a cycle. We're in a cycle driven by liquidity and reflation, and that's driven by the Federal Reserve issuing more money than they ever have on a month-on-month basis or a year-on-year basis. In fact, global money supply is up by 20% or 1/5 over last year, so that has to have an impact. But I think it's more a sugar hit which may run for quarters or maybe a year or so. But a super cycle like we enjoyed or lived through back in the China growth days from the mid-2000s through to the early 2010s, I don't think we're seeing that now. We're certainly seeing some supply squeezes driven by COVID, but again, they're more one-off events than a so-called super cycle. So I think we're definitely in a cycle. It's in an upward trending cycle driven by a recovery in global growth, which is why we're seeing energy names, including the coal names I talked about earlier, enjoying tailwinds. But that's got some finite nature or length about it. So that's why I say beware of the copper names, iron ore names, stocks that are trading or commodities trading at or near 8, 10, 11-year highs. It just makes you start to question why are they there, what could keep them there, and you need to have more stimulus. And we are seeing a lot of stimulus. It's whether we're getting more. So again, caution on the iron ore trade, caution on the copper trade. Energy trade is looking at a great play on a global reflation that hasn't been priced fully yet. So it's kind of how I see the world at the moment.
Your view. Thanks for joining us from Shaw and Partners.
Thank you very much.